Hi there, I'm Jeff Reeves, the editor of InvestorPlace.com. I'm talking with Dan Wiener, the editor of the Independent Advisor for Vanguard Investors, and Jim Lowell, the editor of Fidelity Investor. So guys, you both really like healthcare. You both like healthcare funds. It seems to make sense, right? There's nothing more sure in life than getting old and needing care. But why specifically, Dan?
I am living proof of that.
Aren't we
I am
all?
living proof with my knee operations and all the rest.
But there's a lot of healthcare options out there. So why the specific Vanguard fund that you're looking at right now?
So the Vanguard fund, Vanguard's healthcare fund is a global fund. It's run by a team out of Wellington Management that has been doing this for 20, 30 years as a team. A few years ago, the lead manager, Ed Owens, retired, but his second in command, Jean Hines, took right over, and she's done spectacularly. I mean, it really is a team approach, and the portfolio is very well diversified. They've got biotechs, they've got the big pharma, they've got the medical device makers. And as I said, it's global. They have the opportunity to go wherever the best values are. And it's funny, people think of healthcare as being a growth industry, but they really take, the team at Wellington really takes a value investor's approach to buying healthcare. And they sit on stuff for a long time. They buy when prices are good, and they will hold on for a long time and make a lot of money for all of us.
Jim, you also like a healthcare fund, a little bit different flavor. Why don't you tell me about the Fidelity healthcare fund that you're looking at?
So Fidelity has 5 ways that you can invest in healthcare through their actively managed select sector funds, and they also launched last year a healthcare ETF. So there are many ways that you can participate in the healthcare sector through Fidelity. The fund that I like is run by Eddie Yoon. It's called Select Healthcare. It's their diversified fund, so that owns everything. It can own pharmaceuticals, biotechnology, medical equipment and systems, HMOs. Eddie Yoon comes from 2 parents who are both doctors. He did not take that path, so I think he has a lot to prove, and he's proven himself to be an excellent manager in the healthcare sphere. He says he's going to stay there for a career. I believe it. He has not lost to the S&P 500 in any year that he's managed that fund. It is currently very growth-oriented. You won't find a major pharmaceutical name in his top 10. He's got about 100 names. They represent about 40% of his total fund's assets. But in that top 10, you'll find a preponderance of biotechnology names and medical equipment and systems names. So currently, the fund is tilted towards growth. It is growth not just on the domestic level. We know about the demographic story here and in the established foreign markets and in Japan, aging populations needing more medical equipment and medical services in less invasive ways and means. But as Dan noted, the emerging growth of the consumer class beyond the established foreign markets, beyond our own U.S. economy, provide a very attractive long-term growth trajectory, really a stealth growth way to play the healthcare sphere. And Fidelity Select Healthcare has proven its ability to do just that.
So Dan, a lot of healthcare stocks have run up in the last couple of years, though, whether it's because of the tailwind from Obamacare or whether it is the emerging market opportunities out there. How is the Vanguard fund that you're looking at kind of making sure that it's in the right healthcare stocks, not the ones that are kind of too volatile or have run up too much?
Well, that's why you hire great stock pickers in the form of a mutual fund like Vanguard Healthcare, run by this team at Wellington Management. They're the ones making the determination. They're the ones making the decision. And when something runs up in value, they sell it. I mean, they get rid of it or begin to trim it away and look for better values somewhere else. That doesn't mean that tomorrow pharmaceuticals are going to disappear from the fund. There are always going to be strong pharmaceuticals and weak ones. There are always going to be good values there and not so good values. Same thing in biotech, same thing in the service providers, same thing in the medical device arena. And what's nice about healthcare, of course, is that it's an ever-expanding industry. There are always new companies coming along because, as noted, we're all getting older and we all want more and more healthcare. And the big difference today with, say, our parents' generation or the generation before them is that we sort of believe that we should get good health care and be able to live our lives the way we want to into our 80s, into our 90s. I mean, we are not going to be sitting on the porch eating bonbons in our dotage. We all want to go helicopter skiing, exactly, and riding our bikes and skateboarding and whatever it is else people like to do. They're just not going to sit around. And so healthcare is a growth industry.
Well, that's important to know too, Jim, that like even though we're holding these healthcare funds in your portfolios, that the dynamic nature of these means that with a good manager, they identify the opportunities, they identify the new stocks that are coming out and maybe hold it for the next 10 years instead of just being set in a fixed list of companies, right? They're always evolving.
Absolutely, yeah. It's not static at all, especially in Eddie Yoon's fund. Turnover is about 100%, which means that he's definitely looking for opportunities, and he's also looking at valuations, especially right now in the biotech sector, which is, I think, priced probably a little bit beyond perfection. So I think Eddie Yoon is definitely aware of the fact that that is true. Longer term, the biotechnology names that he holds today will probably be very good long-term returners, but over the intermediate time period, any misstep, and we'll see a swoon like we did just last year, where biotech suddenly sold off 20–25% and then made it up by year end. So it's going to be a volatile component of that fund.
But that's also an important reason why you prefer a diversified healthcare fund, right? Instead
Absolutely.
of focus just on biotechnology, for instance.
Yep, and one of the things that Eddie Yoon has at its beck and call are all the analysts and all the managers of all the other healthcare sector sub-funds in his universe. So he is, I would argue, the most informed healthcare investor on the planet.
Well, that's a lot of good stuff about healthcare. Thanks a lot, Dan and Jim, and we'll talk more on InvestorPlace.com.